Hello guys, welcome back. It's Thursday and we just got the release of the GDP yesterday from USA. As I say, looks very clear for stagflation, and that's what we're going to be jumping in to have a look today. But before we go any further, don't forget to subscribe to the video. Don't forget to subscribe to the channel and thumbs up on this video. And as well, don't forget that today it's Thursday, so it's the webinar day from 4 to 5 p.m. in Sydney time. And the easiest way for you to get the link is joining at the description. You will find the Telegram. So join the Telegram group and wait until maybe 4 p.m. in Australia, 5 minutes before. I will be sending the link for everyone to join. Cool. That being said, let's get to the point. Right, so yesterday we had the GDP quarter one. It was widely expected to be negative. Like JP Morgan CEO saying that was going to be negative. Goldman Sachs was saying that was going to be negative. I've mentioned that. How many times did I mention that all of these big companies were saying, look, we are going to get negative releases. So no surprises at all into the market. We had the GDP coming in at negative 0.3% from the consensus of positive 0.2%. So that's pretty much 100% opposite of what was expected to happen. Previously, it was 2.4%. So in an overall, we had a huge decline. Okay, so from quarter last year, we were positive at like 2.4%, and then we had this huge move down at negative 0.3%. What is happening? Well, inflation is up and GDP is down. So that's a stagflation. Okay, cool. But what had the most impact on the GDP coming in negative was the imports, okay? Because of the tariffs. And I've mentioned that already many times as well. More higher tariffs, expensive products, therefore the flow into the country has been done already. People won't bring more imports, okay, and exports as well. So in a sense, all of this negative result was driven because of the imports. Beside the imports, everything is still fine. Nothing is still crazy. So that's the question I'm gonna be asking myself. Will the market pricing that imports are a negative GDP, or will the market exclude that imports and understand that it's the tariffs and maybe it's a transitionary effect, and look at the broader picture that all the other components of the GDP have been growing or slightly growing, or at the point of like last quarter? Or will the market actually think, okay, look, the imports are really big problem, we are having a big problem on the tariffs, we're not going to buy this thesis? Well, if we look to the DXY, it's trading at the moment at $99,756. And it actually went up on the release, okay? We can actually see that the DXY went up on the release. And as I've mentioned yesterday, most likely we are going to be getting above the 100 level. Not far, 0.300 to get to the 100 level. Most likely we're going to get there by this, coming weeks. With that, euro dollar will probably retrace a little bit down, but let's see how this whole scenario of the market buying or selling those theses will happen. That being said, I just want to say as well, we had the GDP, we had the CPI from Australia yesterday, coming in a bit higher than expected, but interesting fact is that the market is still pricing 125 base points cut, not pricing a 50 base points anymore, but feels like that the market sort of knew that inflation was coming higher on that release, and they're still pricing one cut of 25 base points from the RBA, the Reserve Bank of Australia this year. So really interesting how the market is reacting. Australian dollar lost a little bit of strength in the last couple hours, but most likely that will be reversed into strengthening into the next week, and we can have maybe Aussie dollar a little bit up and as well Aussie CAD a little bit up. Let's stay tuned and see how this will go. Don't forget that today we will have, or already had, the Bank of Japan. Just depends the time we're watching this video. Widely expected. Well, it says here is So it says here is that the market is expecting a pause. So the consensus 0.5% from the previous 0.5%. So no changes at the overall. But maybe we have surprises. Maybe we have surprises because of the Tokyo CPI last week. We may have a surprise. So stay tuned. Come tonight at the webinar, 4 to 5 p.m. in Australia time. And don't forget to subscribe to the channel and give us a thumbs up. If you have any questions, bring them tonight with me or put down in the comments, so we'll make some time to answer them. Thank you so much. I see you tomorrow, or I see you tonight. Bye-bye.